All right, thank you everyone for joining us for today's webinar on our analysis of Louisiana's transition to a flat income tax. My name is Max Ghenis. I'm the co-founder and CEO of PolicyEngine. I'm here with my colleague David Trimmer, who will walk us through the analysis that we did using PolicyEngine's free open source software platform for simulating public policies. So a bit of our agenda today, we will be starting, I'll just give a brief overview of what PolicyEngine is and the microsimulation approach that we take for computing these kinds of estimates. And then I'll turn it over to David to give a demo. So this will be both reviewing the report, which I'll drop in the chat, and also doing it interactively. So sort of looking at how Louisiana's tax system works today. We'll sort of go through a sample household and then a description of the tax bill. And then we'll use the PolicyEngine platform to simulate the same effects that we have in the report of impacts on the household and also impacts across Louisiana. And then I'll wrap it up with describing some of our plans for the next year, building a more comprehensive, accurate, and accessible model for simulating a variety of economic policies, including those that affect Louisianans. All right, so what is PolicyEngine? We are a nonprofit with the mission to compute the impact of public policy for everyone. If you haven't seen our web app, that means we really build all of our tools publicly available, open source on GitHub, and we try and make it really matter to individuals and understanding how it affects their communities and society overall. So everyone can use this to understand how tax and benefit policy affects them. You see on the left side here, you can plug in information about your household, and we will estimate the benefits you're eligible for, how your taxes would change depending on your earnings. We also have an API that powers third-party tools that also help people navigate the benefit system. And most relevant to today, that same underlying simulation lets you simulate and design custom policy reforms. So you can change any piece of the tax system, any of the rules around benefits. And at the heart of all this is an open source rules engine. So what does that mean? Well, we use a technique called microsimulation. And microsimulation really has two components at its heart. One is a calculator, where depending on your household characteristics, we can calculate your taxes and benefits. And the second is pairing that with representative survey data. So here's a super simplified example of what that looks like. We have one household with $100,000 income, no kids, and we can calculate what their taxes are under current law. So currently they pay $30,000 in taxes. They don't receive any benefits, so their total net income is $70,000. And now we make that flexible enough so you can calculate not just under current law, but under some policy reform. So this is an example policy reform where their benefits don't change. It's a tax cut of $5,000. So it basically boosts their net income by $5,000. Now we do that not just for one household, but we do it in a way that can scale to lots of different households. In our case, we have about 100,000 households in the core data set nationwide, fewer for individual states. But now we have, okay, there's some diversity in the types of households we see. We've got another household with a similar income, but they have some kids. So they're going to receive some benefits, and they're also going to pay actually more tax as a result of the reform. And then our third household is a lower income household with one child unaffected by the reform. The last piece here that lets us figure out the impact on society overall is we attribute a weight to each of these records. So we can say this first household represents 500,000 total households, second is 700,000, third is 100,000 households. Now we have enough information to sum up all of those numbers and figure out that, okay, the net income change, if we have all of our households together, is basically the cost of the program. So that's going to be a $1.1 billion program in this hypothetical example. So that's the heart of what we do. And now to see it in action, I will turn it over to my colleague David to go through policyengine.org.
All right, thanks, Max. So before we get into the Louisiana tax bill, I thought we would go through our website and show you our two major functions. So you can go to our website, you can see some of our analysis of the candidates' proposal in the 2024 election. But if we scroll down here, you can see are two major functions, computing your taxes and benefits, as well as computing policy reform impacts, both of which we will be going over. So an overview currently of our policy computing. As you can see here, once we click that button, we have a number of tabs here that you can click on related to different aspects of our modeling capabilities. With the IRS, that's mostly tax policy, health and human services, that deals with Medicaid, Social Security benefits, as well as SSI. But we're looking at state policy right now. We're looking at Louisiana, so we can go to our state tabs and click on Louisiana, and we can look at our income tax parameters. We have different credits, deductions, exempt income, and our main rates that we currently model for Louisiana. So before the tax bill was put into place, the main tax rates were broken up by filing status. So you can click on here and you can look at the first bracket and its rate of 1.85, a second bracket of 3.5, and the third bracket of 4.25. And this is the same for all these other brackets, but they have different thresholds based off their filing status. Additionally, before the bill went into place, there were different exemptions, an age exemption of $1,000, blind as well as 1,000, dependent was 1,000, and personal exemption 4,500 for single filers, 9,000 for joint. So if we wanted to calculate somebody's tax liability or their net income for before the bill went in place, we can click this button right here, enter my household. And right here, then you can enter various household details. We're going to look at 2024 because that's before the tax bill was put into place. We're going to look at a married household with 2 children. We want to make sure we are in the correct state. So on the drop-down menu, we're going to select Louisiana. And we're going to look at a household that's making $60,000 a year. That's close to the median household income in Louisiana. And ages, we can just leave at default. So here we can look at the results, and this is going to calculate their net income based off their earnings. It's also going to look at any benefits they might have, refundable tax credits, federal and at state level, and also look at their tax liability, federal and state. So we can see their employee side payroll tax, household state tax. We can look at any refundable credits that they're getting from the state or federal. We can see the refundable CTC portion. So we can get a comprehensive view over their tax liabilities, their benefits, and can give us a baseline for their net income. So that's mostly a demo of our household calculator, but we want to look at Louisiana's latest tax changes. So we modeled in Policy Engine the individual income tax reforms. So these were 4 major policy changes. Louisiana converted their 3-bracket structure for income taxes to a flat 3% rate. Louisiana, before the tax bill was passed, did not have a standard deduction. They introduced one that was $12,500 for single and separate filers and $25,000 for all other filing statuses. In conjunction with this, they mostly eliminated their personal exemptions, getting rid of the $4,500 filer, $1,000 dependent exemption, and $1,000 for age and blind filers as well. And they also doubled their retirement and disability income exemptions. While we modeled all the previous reforms, the bill also include other reforms that are not in Policy Engine that we want to make sure we acknowledge. The corporate tax rate, similar to the income tax rate, was graduated in 3 different brackets. It is now a flat 5.5%. They had a corporate franchise tax that was eliminated, and they also increased their sales tax from 4.45% to even 5%. Again, we did not model these in our micro simulation, but these are important to note. So let's take a look at what this means for the household we just examined. So we're going to go back to Policy Engine, and we're not going to go to the household yet. We're going to make sure we reflect these tax changes. So these changes are currently in our model. They are now law, so we have reflected that by placing them in our state model. In order to get a baseline, we are going to effectively compare the baseline to if this bill was not past versus now it is. So what we need to do is to essentially revert these changes. So all we're going to do is go to our model, and we're going to go to this parameter right here. This, when it's in effect, changes the graduated income structure to a flat rate. This is currently true for 2025 and after. So all we're going to do is change that to false. So now you can see the line go down here. So this is currently false. We're also going to do the same for the standard deduction. Exact same thing. We're going to change this to false. And we're going to go to our exempt income, go to disability pay. Now it is at $12,000 for 2025, but we're going to lower that to 6,000 to reflect what was current law before the bill was passed. And we're just going to lower that down to 6,000. And we are going to do the same with retirement income. Same thing, make sure we do this for 2025 and onwards, and we're going to lower it to 6,000. Okay, so we have developed our baseline. So all we're going to do, as you can see here, we have we can see the provisions that we have under the provisions tab, and we can cycle through them to make sure that everything's correct. And right here at baseline policy, we're currently comparing this to current law. We actually want to invert that since the tax bill is now law. And all we're going to do is invert it, clicking this button, and that's going to be able to give us impacts for the bill that just passed. Before we calculate our economic impact, we want to make sure we're in the right state. So we're going to scroll down, click Louisiana, and we want to make sure we're in the right tax year, which is 2025. So what we're simulating against is 3 years of pooled CPS data. That's current population survey. We have recently enhanced our state level data with the CPS. However, with some of the smaller states, we get a smaller sample size, which can lead to some interesting results. So we're gonna continue to use the 3-year CPS data for this, and we're gonna calculate economic impact, and we arrive at our key results page, which shows us cost reduction in poverty as well as raising a net income for a certain percentage of people. So let's go through this real quick. We can go to budgetary impact. We can see that obviously this is a state proposal, so we're going to see a change in state and local income, very little federal tax revenue change. So we can see that this bill is going to cost 1.3 billion, which is actually similar to what Governor Landry announced would be the change in individual income. We can also look at the distributional impact. We can look at a percent gain for each income threshold, and this keeps going up as we move up the income thresholds. But we can also look at an average benefit, and we see the same thing. The lower income deciles benefit by $18, $100 for the second one, and then we get all the way up to the top income decile, where their average benefit that they're getting is $3,442. We can also look at what we call our winners and losers graph. This shows each what percentage of each income decile is benefiting or losing out from this proposal. This is a tax cut where everybody is benefiting, so we're not seeing anything in gray, which show a loss in net income, but we're seeing for every single income decile, they're benefiting. Virtually everybody in the top half of the income spectrum is benefiting, while it's a little less in the lower half. We can also look at our poverty breakdown between age. We're seeing a slight drop in child poverty at 0.5%. Overall, we're seeing a 0.8% drop as well. We can also break this down by race and gender, and we can also look at deep poverty as well. There's also inequality impact. We're seeing an ambiguous effect. The Gini index in the state is going up. So is the top 10% share, but the 1% share is also going down. And there's a few other aspects that we measure. We can look at cliff impact, labor supply. If we want to apply our CBO behavioral responses, we could see how this could affect people's incentive to work based off an income or substitution effect. And also we can get an AI summary of the reforms from normal, long, or explain like I'm 5 years old, and we can generate an analysis. And as always, we can always reproduce this reform in Python. So we went through the state impacts for Louisiana. But just to go over the key results once again, the individual income tax cuts will cost the state 1.3 billion in 2025. It will lower taxes for 82% of residents while raising it for zero. Again, these are just the individual income tax changes. It will cut the supplemental poverty measure by 0.8% and increases the Gini index of income inequality for 0.3%. And I will pass it back to Max.
Great. Thank you, David. So just to wrap us up, I'll share a bit of some of our plans for 2025 in terms of enhancing the platform for more of these kinds of analyses in even more detail. So we went through a range of state income tax reforms. We also have a range of other benefit programs. We have SNAP, SSI, free and reduced price school meals, WIC, all those kinds of programs in the model as well as federal. And we're looking to continue expanding those. So just making the model more comprehensive by adding, for example, the premium tax credit with the Affordable Care Act subsidies, as well as childcare subsidies. In the UK, so we operate in the UK and the US, we have begun to break down the impact of policy reforms for every parliamentary constituency and local authority. So those are local areas within the UK that we are creating highly accurate estimates of policy reforms for. So we are looking to expand and do the same thing in the US next year by breaking down by state and congressional district, potentially even legislative district. So if you're interested, if you're from Louisiana and you want to know maybe how this affects all the different parts of Louisiana, get in touch and we can share our progress there. The second pillar is we're looking to enhance the accuracy. So currently we do have behavioral responses, as David mentioned, with respect to labor supply. So if someone's marginal tax rate changes, or if they have some more resources available to them, they might adjust their labor supply based on that. And a range of empirical research suggests that they do to different degrees. So we do have the ability not just to apply the kinds of elasticities that you might see in Congressional Budget Office or other kind of think tanks, but you can actually plug in your own elasticities. Now, this is just scratching the surface. We are looking to expand this to have capital gains. Other type of capital income responds differently than labor income. Also, deductions. So we, a couple weeks ago, put out a calculator called GiveCalc, givecalc.org, where you can calculate how different levels of charitable giving affects your tax liability. Because that is basically a discount on your charitable giving, there's some potential response of charitable donations to how tax policy operates. So there's lots of different margins that people adjust their behavior on that we are looking to integrate into the model. The bigger version of this is to have actually a full general equilibrium model. So we have begun to look into this in the UK. Can we bring in the detail and richness from a microsimulation model with a general equilibrium model, such as overlapping generations models, that you can get the effects on GDP and overall capital formation, a wider range of outcomes over a longer period. And finally, on the accessibility side, we are looking to expand the kind of interfaces that we have available to researchers. So everything is Python oriented now. We're looking to expand that to R and Stata. And we are also in the process of now redesigning. So we're looking at a full UX research study, building the app from the ground up again, where we will figure out what's most important to our users. How can we make that flow more seamless? As you saw, I think it's quite a bit easier to use than any other tools that do this kind of work today. Most of them are really, ours is the only publicly available tool that lets you do that kind of really detailed lever pulling on the tax and benefit policy side. But there's still more we can do. And we currently have two ways that we're using AI in the Policy Engine interface. We're going to explore other ways to both make those features more usable, where people can figure out why they're eligible for some benefit, why their tax liability is a certain number, and also why the impact, sort of explaining the full impact of a policy reform. Um, you can imagine a chat interface or other kinds of where you just go straight to this is the question I want to ask of the model, and it runs it for you. So all of that we're really excited to deliver and get all of your feedback on in the next year. We will be running a lot more of these webinars and training sessions for new reports like these, whether in individual states, new methodologies across the platform, or also policy reforms we're looking at nationwide. So we're grateful for your time today and eager to field any questions you have about the model or the results.